Kitco News special coverage of the AIBC Summit is brought to you by Coin Payments. Crypto payments made easy.
We're back at the AIBC Summit in Malta, and speaking with us now is Sandy Bitench. He is the CEO of 3Air. We'll be talking about 3Air, as well as the whole process of tokenization. Lots to talk about, very exciting topic. Welcome to the show.
Yeah, thanks for having me.
Sandy, let's talk about first FTT token, which is the native token of FTX. Following the collapse of FTX, people are wondering, why was the valuation of the whole company based so much on the token itself, and what exactly was the token used for? Let's start with that. You are an expert on the utility or providing utility of tokens when you issue tokens for companies. So tell us, what was the utility of the FTT token?
Oh, that's a good discussion, right? Actually, almost every exchange has a token, although they really don't need the tokens. They just utilize them to create some additional value. They might give you some discounts on the trading fees and so on if you hold the tokens. There might be some other perks that you can get. But in the FTT case, FTX and Alameda Research got a really good thing going on there. Yes. For them, for sure, but not for the others. So they were inflating their own token. For instance, how they could do that is they were investing in startups, and they would either pay startups with FTT tokens, or they would give them actually cash, but they were always also giving them the requirement that they need to buy FTT tokens with the cash. So then when the buying actually occurs, then the price goes up. Right? And when they got back the cash that they've given to the startup, they got the price up. So they got the cash back, and the valuation got up just for almost nothing. And then they were again borrowing cash against the token because they had more value now. Yes. The FTT token had more value, so they could borrow more. So everything was really leveraged. So once Binance then sold off their token, everything just went into margin calls, and all this stuff just collapsed instantly.
Yeah, the coin was trading around $22 before it collapsed, went down to $5 after Binance started selling it. But you mentioned to me offline, it wasn't just Binance, right?
No. Also, once the FUD started, everyone started selling the tokens, whoever could, and the $22 was actually the biggest mistake probably that they've made. They publicly announced that they would be willing to buy back all the FTT tokens from Binance at $22, and that meant that probably they had some margin calls there. So once you have a token leverage and you borrow against it, once the value of what you have borrowed is actually higher than what you put up as a collateral, then they'll liquidate you and they'll sell your token to repay the loan actually. So this is what happened. So it was like a liquidation.
Mm-hmm. Do you see this a lot where a large company issues a token and basically, if I could summarize in layman terms, basically uses this token to raise money and then collateralize their assets based on the valuation of a token that was issued? Does this happen?
It's not so easy to do. So we don't see that in many cases because you just won't get a loan against any token. They need to be liquid and so on. So you need to build something behind it. And this is where Alameda and SBF, they were really good. So they did have some volumes behind it. They did make the hype around it, and they actually fooled everyone, to be honest. So almost nobody knew what was happening behind it.
When you say fooled everyone, what exactly was not being disclosed honestly?
The valuations that they put up were, in a sense, on paper they were correct, right? But there was no substance behind it. That's it. So the token is only worth as much as the users are actually willing to hold it. and if it's really leveraged. So I don't think that they were disclosing any of the leverage that they were doing. And where was the biggest fraud was actually happening is that they were using the funds that people deposited into the FTX exchange,
Yes.
and they were channeling that towards Alameda Research
course.
to cover, the hole that they made, and using those funds for trading risky assets.
But going back to FTT, I know they were misappropriating client funds, but that wasn't necessarily linked to FTT in particular. But just talking about tokens, you mentioned that there was no intrinsic value behind it. It was just the valuations were based on market demand. I'm being philosophical here, but isn't that most cryptocurrencies? I mean, what is the utility of Bitcoin, for example? Is that not the value is just derived from market supply and demand? Is it not?
Yes, it is, but we have also a lot of traditional assets that are valued like this. So you just
Yes.
can you can take simple fiat currencies. They're all
Fiat currencies,
kind of backed with the idea that the government will, in a sense, back it. Right, so we are all backing it in that sense,
Yeah.
and it's only about how many people trust the asset and how many people want to hold the dollar. And if nobody wants to hold the dollar will plummet, well, like any other cryptocurrency that nobody actually wants to hold. So Bitcoin does have a really good value proposition, and that is that it makes transfer of value without the need of a third party. So we can directly transact between us. And before, we always needed a bank because we didn't know each other, right? And because we didn't know each other, we didn't trust each other. So then we needed a third party like a bank that was doing the trustee part. And this is how everything right now in traditional finance still works. But with Bitcoin, you don't need that. So there is a lot of intrinsic value in that sense. So I would say that Bitcoin is even far undervalued where it is right now.
Okay. Let's talk about that for just a bit because I have other topics to discuss, but we brought up Bitcoin. It's undervalued right now. What is your proposition? What is your thesis for this undervaluation?
Well, I think that Bitcoin has the potential to become a global reserve currency, just how it is built. We don't need to ask anyone. It's more about the adoption. So I think right now the governments are the ones that are still holding it back, and of course also you need to be a bit tech savvy to be able to use it. So also the technology needs to evolve a bit. But I don't see why everyone wouldn't be willing to use Bitcoin, because it has a lot of advantages, and it also needs to say that once everyone starts using Bitcoin, like for real, it's going to lose the speculative value actually.
Yes.
Right? The speculative value is just right now because the volumes are a bit lower. For sure, compared to traditional markets, but once the adoption is there, the volatility will go down, and then it'll become a reserve currency, in my opinion. So, if everyone wants to hold some part of Bitcoin, this goes into millions. It's about how do we want to value that, because if everyone switches to Bitcoin and we lose fiat currencies, so if there is no dollar anymore, so how will we value Bitcoin against what? That's the question then.
When you say that everyone will start using Bitcoin and then it will lose its speculative value, Sandy, what exactly will we use Bitcoin for? I've heard criticisms that Bitcoin is slow, and when you think about the fact that one or half a block needs to be validated for a transaction to pass, it takes time, right? I don't want to stay in my line in Starbucks and wait for a block to be validated before my coffee gets purchased. So it's not an efficient means of payment without layer 2 protocols like Lightning. How would you respond to that?
Yeah, for sure it won't be, and I also don't see Bitcoin directly being used as payment. It just won't work. I think Lightning could be, but where I see the main issue of Bitcoin becoming money is actually that it's in a sense deflationary, right? For sure it's not inflationary. It is a bit
Deflationary, how so?
and people are forgetting their private keys and so on. So if you cannot move a coin anymore, you lost it. You lost your wallet. It's gone, right? And this is happening day by day still. So in that sense, I think it's more or less deflationary, or at least it will become. But for sure, it's not growing with the with GDP, for instance, right? And where the current economic models start failing is actually that if you have a currency that's not inflating but is deflating, and then that means it's going up in value because you're measuring against the GDP, so the products that are out in the world, then it starts growing in value. And if it starts growing in value, people are not inclined to spend it; they're more inclined to save it. Right, so we're going from the inflationary spending environment to really the saving environment. So, for instance, you would be, should I buy this car today, or should I wait a month or 2 months or 3 months and pay 5% less for it because the value will go up of my currency. So this is where we have right now a big issue. So I think what will happen is that Bitcoin can become a reserve currency and on top of that another currency will be issued that's going to be money, and that one's going to be inflationary. And I'm still looking for that holy grail of a stable coin that we could peg to not really the inflation. I would like to peg it to the growth of the product that we are actually giving. So I'm seeing something like, let's make a basket of some goods that are really important, the ones that are right now maybe making up the basket for measuring inflation, and try and peg a stable coin to that, so that one coin will always be able to buy the same amount of bread and milk and whatever we put in that basket. And then we would need to allow, in a sense, everyone that's producing that just to replace it all the time to one of those coins. And this is then you have like the arbitrage and the pegging mechanism there.
That's a very interesting concept, Sunny. That's the first I've heard of it. Suppose a government were to create a stable coin where they peg it against CPI index, for example. Would that not incentivize the government to inflate their products even more so that their stable coin could be more valuable against other currencies? Or perhaps they would have an incentive to deflate it, so they would make their exports cheaper. Who knows?
No, they for sure can manipulate it, and there are some pros to that, but the problem is that the governments and the people behind it are selfish. We are selfish in nature, so it's hard to trust somebody to really do the right thing. And they're just not doing it. And there are always scandals, right, with governments and the people in power and so on. So they'll just abuse it. So I think we need to give this power to the people, to the communities, and maybe run it something like a DAO, or maybe have it like totally self-sustainable so that nobody actually touches it and cannot manipulate it. And I think this is going to be also really good for business growth, if you really can be certain that the monetary policy is going to be what it says it's going to be, that it is, and it's not going to change, then you can adapt your business to that. But right now we have so many unknowns. What's going to be with the inflation? Are we going into recession? Is the Fed going to raise the interest rates? How will that affect my business in the end? So then you never even start, or you start and you needn't plan for it, and then you collapse because there is something going on at the governmental level that you cannot control. So it brings a lot of positiveness. The only concern that I have is actually the problem of people getting people to spend the money, because we also need somebody to buy our products if we want to grow.
Okay, how do you feel about stable coins pegged to a commodity or a hard asset, oil, gold, for example?
I think it's a good idea because it makes it liquid. So this is what the stock markets have always been doing it, right? So we have quite efficient stock markets. So the need for that is not so much in making it liquid. I think where it can really help is to actually bring value from one stock market maybe to the other, so that becomes interchangeable. So for some settlements and so on. But the blockchain needs to evolve because before we can actually run stock markets on it, because the volumes are far exceeding the capacities that current blockchains actually have.
Interesting. Let's talk about tokenization now. It's an area in which you specialize. The process of tokenization am I right to say that? Well, we're going to talk about different types of fund offerings, but the process of tokenization, is it right to assume that it is purely used for fundraising, or are there other reasons to tokenize assets?
No, so it is to make maybe some things liquid. So if we can start tokenizing real world assets. So for instance, if we would go into tokenizing some real estate, that would mean that I can sell my real estate far easier. Because there is the token that is bound to a specific part in the world, in the real world, and I can transfer ownership of that, or even partial ownership, without any intermediary. I can send it to you.
My house is now tokenized, and where would that token be traded?
We don't have that yet, so we are missing the regulatory conditions for that. So quite a few have tried already, but it's a security in that sense.
Wow, okay.
So we still don't have really evolved security markets, and for securities you need to be then also a professional investor and so on. So not everyone, you cannot sell that to retail without, at least not in all jurisdictions around the world, without facing some legal actions against you. So it's illegal to do that. But once we're talking about if tokens are only for raising capital, I would say that we are past the point that everyone would just throw their money into the token just for raise some capital. They need to provide some good use cases. Sure, we could have far less use cases, far less tokens for what the projects are usually doing. They could be utilizing other tokens, but utilizing your own token, if you really have a project with where the token can be really useful, you are creating additional value. And we can talk about if it's inflated or not, but it does create additional value in a sense when people really want to use your product, and you then are in a sense forcing them to use your token, right? And if the need for your products is big enough, then people will buy your token and they'll use your token, and this is where you create an additional value, and that can be really good, and I would say, yeah, it is inflated in a sense that there's maybe no real backing towards it. It's again only the demand that you're creating with your services. But it is also something that kickstarts and makes it easier to fundraise for sure. Going through an IPO it's far more difficult, and we can also say shares are also the same thing in a sense. They give you part of the ownership of the company, but what is a company if it's only a company that's providing services that has no real assets on their balance sheet? It's only what people are trusting the company.
Let's make that parallel. Very good example. If I buy shares of a company, assuming the class of my shares gives me voting rights, I could go to a board meeting and vote on specific agendas and actually have direct control through my votes on the company's direction. Can something similar happen in the crypto space?
Yeah, it's actually happening all the time right now. So the DAOs, the decentralized autonomous organizations, are on the rise, and they are actually using the tokens or NFTs or whatever is on the blockchain tokenized as one vote. Or you can even have like different methods of voting. You can have afterwards, you can have direct execution of some things while this is while the vote goes through. A transaction can be triggered, for instance, directly. So it's far better even in that regards, in regards for voting and managing some companies.
So you advise, am I right to say that you advise many projects on their offerings?
Yes, I do advise quite a few projects on that. Yeah.
So tell me about the process. How much do they raise? How do you decide on the valuation? How do you decide on the mode of offerings? Is it an ICO? Is it an IDO, DEX offering, so on and so forth, IEO? And how do you promote the offering to the public?
So first of all, there needs to be a good use case for the token. That's the first thing, and then you can start thinking about what how do you allocate the tokens? Who gets, which part of the tokens? How much goes to the communities? Maybe you need staking. How much should the team get for their work so that they're motivated? You always need to think about that. There'll be some advisors. You need to think about liquidity, because once you launch a token, you'll need to provide the liquidity so that it can be traded and so on. So this is where I usually start. So with the token use case, then thinking about how many tokens should be out there, and it's more or less almost a trivial question. It's because the tokens are usually really dividable, to really small pieces.
Yes.
So you're more or less focusing. Do you want to have a token that's costs $100 or $10,000, or a token that costs like a fraction of a penny? And there's different psychological motivations behind that. So we've seen that if you go with really low token prices, like with a lot of decimal places, people perceive it right now as that was the area of the meme coins. So they'll usually be presented as scam. But then if you have a token that's worth $1,000, they mean, oh, that's too expensive, right?
Generally speaking, yeah, you're right. So you brought up the topic of scams. The general public may not be well informed on the utility of a token. If I were buying a token, how do I know that it's a scam?
Well, you need to do your due diligence.
Before it loses 99% of its value.
You need to do your due diligence. So there are for sure some red flags. It depends if you're investing really at the early stage, or are you buying the token afterwards. But you need to know a bit about tokenomics. You need to look if there is a team. You need to look what they've built. Has there been if you cannot read the code yourself, the smart contract code, you need to look if there were audits made, what the audits actually say, because you can also have an audit that came back negative and people are still not reading it, and it's just okay, that project has an audit, right? But then nobody actually reads it. And audits, if you take the time, you should be able to understand it, and if not, there'll be somebody from the community that has dissected it. So also look into the communities, try to read as much as possible. Try to read the negative comments and the positive comments, and then you'll find somewhere in between. You'll find the actual the truth. And if you buy something of the open market in the early stages, you need to make sure that the liquidity will be there, so that if a project have locked the liquidity, so they're not. So this is called the rug pull. So they provide the liquidity for trading, and then they just take everything that's in the liquidity pools out, and then you cannot sell to anyone anymore, and the token virtually goes to zero.
Okay. Finally, let's talk about your work at 3Air. Tell us a bit about the company, what you do.
Yeah, so I'm the CEO of 3Air. 3Air is a mix of a telecom and blockchain company. So we have currently our telecom infrastructure set up in Sierra Leone. We have built the technology specifically for the emerging markets where there's no cable infrastructure laid. So we set up base stations, and then we have a 50-kilometer radius around those base stations where we can provide up to 1 gigabit per second of broadband internet, and also digital TV and IP telephony. So this is why we're focused so much on the emerging markets and Africa in particular right now, just because the sheer need, and we're there to connect the unconnected. And then the platform, how we designed the platform, is actually to provide people with all the necessary tools to become financially independent.
Mm-hmm. Okay, perfect. And just final question: why Sierra Leone?
Oh, Sierra Leone is our testing ground, so to say. Although we're running it like a complete business, but no, it's every wireless technology has usually some issues with environmental influences. So heavy rain, fog, those things can really influence the strength and the quality of the signal. So Sierra Leone has one of the most heavy rainy seasons in the world. So this is where why we wanted to test it in the harshest environment. And also we like flat terrains, and Sierra Leone, Freetown is not flat, so we were looking if we can really cover all the spots, and how to then get to there are always some dead pockets with wireless technologies, how to manage that in the best way. So we were just refining everything, and it's a small country. if we would fail, nobody would actually know. Thankfully, we didn't.
All right, Sandy, it's a pleasure to meet you. Thank you for joining the show.
Thank you.
Thank you for your time, and thank you for watching Kitco News. I'm David Lin. Stay tuned for more, and don't forget to subscribe.
Kitco News special coverage of the AIBC Summit is brought to you by Coin Payments. Crypto payments made easy.